Hey guys, it's Carter. Happy Halloween! This is my favorite holiday. I love the vibe, I love the aesthetic. Now I wish we could just skip right to spring because I hate winter. Alright, but in honor of Halloween, my favorite holiday, I just wanted to show you guys the scariest chart right now that I can find. It's the 3-month chart of the SPX, the S&P index. So, without further ado, here we go. But remember that I am not a financial advisor and that I don't give financial advice. So if you've watched me previously, you'd be aware of this 5-wave move up in the stock market that I've been tracking, this 1, 2, 3, 4, 5, and that we could potentially now be in the wave 5 of this bigger wave 5, which means we are near a potential end to the impulse, aka at or near a very long-term top in the market. So if you've watched my videos before, you know that I'm bullish on the stock market in the next 3 to 6 months, but we could potentially see something disastrous play out in the next handful of years. 4 to 10 years maybe might not be very good. But in this video, we're going to be looking at something different than the wave count. So in this video, I'm going to show you the RSI, this moving average right here, this purple line. It's the 16-period moving average on the 3-month chart, which means it's representing a moving average of the last 4 years of price action. And then the blue line down here is the 104 period representing the last 26 years. So it's a moving average of the last 26 years of price action. And what I've noticed is that present day, we have now a high in the RSI, a potentially lower high right here, and a potentially third hit of this resistance on the RSI. And a potential third hit could be disastrous. Why is that? So if we go back to the dot-com bubble here, when prices were absolutely exploding, we see this same 3 hit on the RSI rule. So we had a high in the RSI, a second hit of this resistance, and then a third hit of this level before we saw the actual top of the market on a lower high on the strength, and then we saw a 50% crash. We saw a 50% crash. There was a brief rally and then another crash. So look at that. It was 10 years of devastation here. And we saw it lead with this 3 hit of resistance on the RSI. That's the same thing we're seeing happening present day. So we're seeing the 3 hits present day as well. So sure, that's cool, but it's only one example. But if you go back to the 1960s and 70s and zoom in, you can kind of see it happen again. So we were forming long-term divergence on the RSI starting in 1956. We hit the high here, and we continuously made higher highs in price. But look at this. We came up to this resistance level on the RSI again, and then for a third time, we did that again here. And this was the high we made. This is the highest point in the market before we had a 50% crash. So this third hit of the RSI resistance was right before we had a 50% crash. The third hit in the dot-com bubble was right before we had a 50% crash. Present day, what are we seeing? A third hit of this RSI resistance. Now, I'm not saying that we're for sure going to see a 50% crash, but we've loosely seen this pattern play out before and it has not led to good things. So that's just one concern that I'm seeing here. So now let's pair that information with these moving averages here that I introduced earlier in the video, this purple line and the blue line. See, when you're in a long-term bull market, you want to hold the purple line. When you close and confirm below the purple line, by that I mean you close a candle below the purple line and then you close a candle below the low of the candle that breached the purple line. That's a close and confirm below. When you do that, you typically see a crash, a rally back above the purple line, and then a drop to the blue line. So we've seen that pattern play out here in this dot-com era. After our 3 hits on the RSI, we closed and confirmed below the purple line here. We then had that rally I was talking about back above the purple line, and then we eventually crashed to this blue line. So when you close and confirm below this purple line here, this signifies that eventually you are going to crash to the blue line. That happened here. Also in the 1960s, the same thing happened. So we had this long extended move of holding the purple line as support, held it here as support. We didn't close and confirm below. We didn't close and confirm below here, but here we definitely did. We had a candle that breached it, and then we eventually closed lower than the lowest wick of that candle. We closed and confirmed below it here. And then we came up and had our last hit of this RSI resistance before we had that 50% crash to the blue line here. And this marked the bottom. So a crash to the blue line marked the bottom. The third hit of the RSI resistance marked a 50% crash. But to be honest with you, it looks like present day we are more similar to this situation here, the dot-com bubble, just because of the fact that our 3 hits of that RSI was marking right here before we breached the purple line for the first time. We had already breached the purple line before we saw that third hit of this RSI resistance in the 60s and 70s. So if present day is anything like we saw in the dot-com bubble here, then in the next 10 years, we could potentially experience a long ABC correction, 2 huge crashes of more than 50%, and overall just misery in the stock market. So present day, we are both well off and above this purple line and the blue line, but because we're seeing this third hit of the RSI and because of the shorter time frame stuff that I've shown in previous videos, I think we are near within 3 to 6 months of a potential top in the stock market, and then we could potentially see a crash to this purple line. You typically crash to the purple line and hold it in long-term bull markets. However, I've shown you facts now that this could be the time we breach this purple line and then crash 50% or something similar to that. And if we do, then in the next 10 or so years, we could expect to see another huge rally, followed by another huge crash to that blue line. So the next 10 years could involve just a long played out correction that will eventually take us to this blue line here. And right now, the blue line is at 2,093. We are at 5,808. That's incredibly scary to think about. Now, this blue line is going to rise, but make no mistake, it's still going to be devastating if we see anything like what happened in the dot-com bubble play out today. All right, that's all I have in this Halloween special. Have a good one.